Hello, friends. Hello. Many of you have been asking me about IPO, what it is, and how does it work. So in this episode, we will learn about IPO, what it is, and how does it work. So without any further delay, let's get started. IPO stands for Initial Public Offering. It is a process by which a private company offers shares to the public for sale for the first time. So when a company wants to raise funds from the public for the first time, it has to go through a process called IPO, Initial Public Offering. So when a company goes for IPO, it is also known as going public. When a company goes public, it has to appoint a set of advisors who will help the company with the entire process. The primary role of these advisors is to set the price for the IPO. Now, based on the demand from the investors, they will actually decide at what price the IPO will take place. Now, once the price is decided, the next step is to file a red herring prospectus with the regulator. Now, what is a red herring prospectus? It is basically a document which has all the details about the company, its financials, its future plans, etc. So this is something which is like an offer document that is being sent to the investors. This document has to be approved by the regulator. Only after that, the IPO process can move to the next stage. Once the red herring prospectus is approved by the regulator, the next step is to actually list the company on the stock exchange. Now, when the company lists itself on the stock exchange, it becomes publicly traded. And once it is listed, the shares of the company can be traded on the stock exchange, and the investors can make money by buying and selling the shares. There are two types of IPOs. One is a book-building process, and the other is a fixed-price process. In a book-building process, the price of the IPO is decided based on the demand from the investors. So basically here, the price is not fixed. It keeps changing based on the demand. Whereas in a fixed-price IPO, the price is decided well in advance, and it doesn't change. In India, the minimum amount that a company can raise through IPO is 50 lakhs. If a company wants to raise less than 50 lakhs, then it cannot go for IPO. In that case, it has to approach SEBI and make a request. But I don't think so anybody has approached SEBI for less than 50 lakh IPO. Friends, this was all about IPO. I hope now you have a clear understanding of what is IPO, what is Initial Public Offering, and how does it work. If you have any questions on IPO, then please let me know in the comments. I will try my best to answer all your questions. If you like this episode, then please hit the like button. Thank you very much for watching this episode till the end. Have a great day.